By today, all the big four banks, CBA, Westpac, NAB, and they've jacked up rates for many of their investor and owner-occupier loans. So CBA was one of the latest ones today to announce such a hike. So a lot of their loans went up by 0.8%, so 80 basis point increase. So that's the equivalent of 3 rate hikes from the Reserve Bank in one go. So NAB and Westpac announced their rate hikes last week, and it was pretty similar too. So when we take a look at this graph, it illustrates this point that there's a very wide gap between variable and fixed rates now. So the difference between the average 3-year fixed rate at the major banks and the average variable rate is about 2.6%. So that's pretty huge. So when we look back during the pandemic, many people were on fixed rates that were less than 2%. So that was definitely a good rate then. Now variable rates are giving you definitely a better return. I mean, they're much lower than the fixed rates. So banks basically are getting ahead of the Reserve Bank rate hiking cycle, Kirsten.
Okay, and of course it does come just before the Reserve Bank plans to meet next Tuesday. What's expected then? Well,
next Tuesday, many economists reckon there will definitely be a rate hike. So currently the cash rate target is 0.35%, still near record lows. So if it's a 25 basis point hike, then it will go up to 0.6%. But a lot of economists reckon it could also be a supersized rate hike of 40 basis points. So it depends whether the Reserve Bank wants to signal business as usual or they want to catch up because there's a view that they probably left it a bit late to raise rates to target inflation. So I guess it depends who you ask, money markets or economists, because when we take a look at this graph, there are very aggressive predictions from money markets. They reckon that the RBA will hike rates pretty much at every meeting for the rest of this year, whereas economists definitely think it'll be a lot less aggressive. So when we take a look at this graph, about 1 year from now, in 13 months, markets reckon rates will be 10 times higher than where they are now. But in the meantime, the Australian economy is doing very well overall. So you may recall a couple of days ago, the GDP figures came out and showed the Australian economy grew by a solid 3.3% in the year to March. But the not so good news, Kirsten, is that growth is mainly benefiting business rather than workers. So especially mining companies, they're getting the biggest boost from growth. So wages are growing at a much slower pace according to this graph. So this graph shows that the gap between corporate profits and employee salaries have never been higher, and the pandemic has widened that gap considerably. So I guess the RBA is expecting wages to go up gradually, but the hope is they go at a much faster than expected pace. They'll definitely help with the mortgage repayments.